All right, welcome back everyone to Talk Tickers, where I like to say we unpack the good stuff, the juicy details from all those earnings calls you might not have time to listen to yourself.
Exactly. We cut through the noise, give you the insights that matter, and maybe even toss out a slightly crazy trade idea or two along the way. All in good fun, of course.
Right, always in good fun, and as always, this is definitely not financial advice.
Definitely not.
But hey, speaking of juicy details, today we're diving deep into Oracle's latest, their fiscal Q3 2025 earnings call. And let me tell you, there's a lot to unpack here.
Yeah, no kidding. This was a big one for Oracle. A lot of interesting things happening over there. Lots to talk about.
So for starters, just to set the stage, what were some of the key numbers that jumped out at you right away? What kind of quarter did Oracle have?
Well, I think the thing that really grabs your attention right off the bat is the bookings number.
Yeah.
This was a record-breaking quarter for Oracle in terms of new deals, adding an unbelievable $48 billion to their backlog.
$48 billion. Wow.
Yeah, that's future revenue they've already contracted for, not even recognized yet. So that's huge.
That's a lot of future business.
And it speaks to the demand they're seeing.
For sure.
Now, their total RPO, that's their remaining performance obligation, which basically represents the total value of all their existing contracts that haven't been fully delivered yet, that jumped to $130 billion, a whopping 63% increase year over year.
Okay, so those numbers really paint a picture of strong demand, especially for the future. But where's all this growth coming from?
Well, the cloud is the real star of the show here, as you might expect.
Right.
Their total cloud revenue, which includes both SaaS and IS, grew by a very respectable 25% to reach $6.2 billion.
Solid.
But when you break it down, the IS side, the infrastructure as a service offering, that's where things get really interesting.
Oh, yeah.
That segment saw a massive 51% expansion to $2.7 billion, which tells you that their cloud infrastructure offering, OCI, is a major growth driver for them right now.
So what's fueling this OCI growth specifically? Why is it doing so well?
Well, one word, AI.
Of course.
Artificial intelligence is red hot right now, and Oracle is definitely capitalizing on that.
Makes sense.
Their OCI consumption revenue, which means how much customers are actually using and paying for, that shot up by 57%.
Wow.
And even their traditional strength, their cloud database services, they saw a healthy 28% increase as well.
So it sounds like they're firing on all cylinders, cloud-wise at least.
Yeah, pretty much. And if you zoom out to their total revenue for the quarter, that reached $14.1 billion, an 8% increase year over year.
Not bad at all.
Not bad at all.
And what about profitability? How did their earnings look this quarter?
So their non-GAAP earnings per share, that came in at $1.47, which is a 7% increase when you adjust for currency fluctuations.
Okay, so they're definitely making money.
Oh, yeah. And it seems like they're pretty optimistic about the future, too, because they just announced a 25% increase in their quarterly dividend, bringing it up to $0.50 per share.
That's a pretty significant bump.
Yeah, it is. It suggests they're feeling quite confident about their ability to generate cash flow and return value to shareholders.
Okay, so that's the high-level view, but let's start digging into some of these details. Maybe start with that massive backlog and RPO number, because that's a big deal.
Yeah, absolutely. Those numbers are hard to ignore, and I think they really tell a story about where Oracle is headed.
Okay, so what's the story there? What should we be reading into those numbers?
Well, the $48 billion in bookings, remember those are signed contracts, agreements for future services. So that's not just potential revenue, that's committed revenue that's coming in down the line.
Right, it's already in the bag.
Exactly. And the fact that it's such a huge number, it really suggests strong momentum for their business.
And what about the RPO, the $130 billion? What does that tell us?
So the RPO, that's a little more nuanced. It's not just about short-term wins. It's about the longevity of their customer relationships, the stickiness of their offerings. What that number tells you is that customers are willing to sign up for longer-term commitments with Oracle, which is a really positive sign.
It shows they have confidence in Oracle.
Exactly. And what's even more remarkable is that this $130 billion figure, it doesn't even include potential contracts from Project Stargate.
Oh, right. Project Stargate. We've been hearing a lot about that, but it's still kind of shrouded in mystery.
Yeah, it is. It's this big AI-focused initiative that Oracle's been working on, but they've been pretty tight-lipped about the details so far.
Right.
But from what we've gathered, it could be quite massive. So if they start signing contracts related to Project Stargate, that RPO number could potentially balloon even further.
Wow, so that's something to keep an eye on for sure.
Definitely.
And you also mentioned that a big chunk of that RPO is coming from their cloud services, right?
Yeah, absolutely. Their cloud RPO, that grew by over 90%, and it now represents more than 80% of their total RPO.
Wow, so they're really leaning into the cloud.
Oh yeah, big time. And they expect to recognize about 31% of that cloud RPO as revenue within the next 12 months.
Okay, so that gives us a pretty good idea of their near-term cloud revenue expectations.
Exactly. It provides some visibility into their future performance.
All right, now let's talk about that impressive cloud infrastructure growth, that 51% increase. That's really something.
Yeah, no doubt about it. That 51% growth in OCI revenue, or even 54% if you exclude some of their legacy hosting services, that's a real testament to how well their cloud infrastructure business is performing.
And they said they're outpacing some of their biggest competitors too, right?
Yeah, they specifically called that out, which is pretty bold, but the numbers seem to back it up.
They do. So what's the secret sauce here? Why is OCI doing so well?
I think a big part of it is their focus on AI. They're really riding that AI wave.
Yeah, we talked about that earlier. Their consumption revenue related to AI went up like 57% or something.
Yeah, exactly. And their annualized revenue for infrastructure cloud services, that's now sitting at over $10 billion.
That's incredible.
It is. And a lot of that growth is being driven by customers who are using their GPUs, the specialized processors that are essential for AI workloads.
Right. So they're becoming a go-to destination for companies that are doing serious AI stuff.
That's right. They're attracting the big players in the AI space.
Now, they did mention some supply chain issues, right? Like component shortages and things like that.
Yeah, they did say that they've been facing some delays in getting certain components, which has unfortunately impacted their ability to expand their cloud capacity as quickly as they'd like.
Well, that's too bad. So they're basically leaving money on the table because they can't build out their infrastructure fast enough.
Yeah, in a way, but they did say that they expect these supply chain issues to ease up in the first quarter of their next fiscal year.
Okay, so hopefully they'll be back on track soon.
That's the plan.
All right, so speaking of building out their infrastructure, I saw they now have 101 cloud regions online. What's the significance of that?
So cloud regions, those are basically their major data center hubs.
Right.
They're spread out all over the world, and the more regions they have, the closer they can bring their cloud services to their customers, which is really important for performance and for regulatory compliance in some cases.
Makes sense. So it's all about having that global reach and providing a good experience for their customers no matter where they are.
Exactly. And they also talked about how their second generation cloud architecture, it gives them a lot of flexibility in terms of deploying and scaling these regions efficiently.
Interesting.
But it's not just about the number of data centers, it's also about the power within them. Their contracted power capacity, the amount of power they have available to run all this infrastructure, that's actually growing even faster than the number of cloud regions. Yeah, they expect it to double this calendar year and then triple by the end of their next fiscal year.
Wow, that's a massive increase.
It is, and it really underscores their commitment to supporting those high compute AI workloads that we were talking about earlier.
Right, because AI it's very computationally intensive.
It is. It requires a lot of processing power.
And they're basically positioning themselves as the place to be for AI training and running AI models, right?
So, exactly. They're making a big bet on AI, and they're putting their money where their mouth is.
Now, one thing that I find really interesting about their cloud strategy is that it's not just about their own infrastructure. They're also doing a lot with multi-cloud partnerships.
Yeah, that's a really smart move on their part.
It is, and that 200% growth in their multi-cloud business in just the last 3 months, that's pretty remarkable.
Yeah, it shows that there's a real appetite for what they're offering.
So what exactly is their multi-cloud strategy? What are they doing there?
So basically, they're partnering with other major cloud providers like Amazon, Google, and Microsoft.
Okay.
And they're making their database and other services available within those other cloud environments.
So they're going where the customers are.
Exactly. They're meeting customers where they are rather than trying to force them to use only Oracle's infrastructure.
Right. That makes sense.
And this approach, it seems to be paying off. They currently live in 18 cloud regions with their database at cloud services through these partnerships.
Okay.
And they have plans to expand to another 40 regions in the future.
Wow.
So they're really covering a lot of ground.
They are. And it's a win-win for everyone involved, right?
Yeah.
The cloud providers get to expand their offerings.
Yeah.
Oracle gets to reach new customers.
Yep.
And the customers get more choices and flexibility.
Exactly. Everyone benefits.
So it sounds like their core cloud database services are also doing well alongside those multi-cloud partnerships.
Oh, yeah, definitely. They saw 28% growth in that area, which translates to an annualized revenue of about $2.3 billion.
Okay, so that's still a big part of their business.
It is. And the adoption of their autonomous database, that's their self-managing database, that's also accelerating.
Oh, interesting.
Their consumption revenue for that grew by 42%.
So it seems like their database business it's in good shape.
Yeah, no doubt about it. And they see their cloud database offerings, along with their OCI infrastructure and their strategic SaaS applications, as the three pillars of their future growth.
Okay, so let's talk about those SaaS applications, the software side of things.
Sure.
Their strategic SaaS applications, they saw 18% growth, reaching an annualized revenue of $8.6 billion. What's driving that?
Well, one of the most compelling things they're doing on the SaaS side is how they're integrating AI into their applications.
So AI it's not just about infrastructure for them. It's also a key part of their software strategy.
Exactly. They're really pushing the idea of AI-powered applications.
And they gave some specific examples too, right?
Yeah, they did. They talked about how they have AI agents in their healthcare applications that can automatically update electronic health records.
Oh, wow.
And streamline the whole prior authorization process, which is notoriously complicated and time-consuming.
Yeah, it is. It's a pain.
And then in their Fusion suite of applications, which covers things like supply chain, finance, and HR, they have AI agents that are helping to improve efficiency and decision-making.
Okay, so they're really trying to make their applications smarter and more automated through AI.
Exactly. And they believe that these integrated AI capabilities, they're a major differentiator for them.
Right, because it's not just about having applications in the cloud anymore. It's about making those applications intelligent.
That's right. It's about adding that extra layer of intelligence and automation on top.
Now, with all this positive momentum we've been talking about, it's no surprise that their financial outlook is pretty optimistic.
Yeah, they're definitely feeling good about the future.
So what are they saying about their expectations for the coming quarters and years?
So they actually raised their guidance, which is always a good sign.
Yeah.
They now expect to exceed their previous goal of 50% growth for their total cloud infrastructure revenue in this fiscal year.
Nice.
And looking ahead to fiscal year 2026, they're anticipating even faster growth. They're aiming for a total revenue of around $66 billion.
Okay, so that would be roughly a 15% increase.
Yeah, something like that. And perhaps even more impressive is that they're now projecting a growth rate of around 20% for fiscal year 2027.
Wow, 20%. That's a big jump from their previous guidance.
It is, and it shows just how confident they are in their long-term growth trajectory.
And for the upcoming fourth quarter of this fiscal year, what are they expecting?
So for Q4, they're forecasting total revenue growth of 9% to 11% in constant currency and cloud revenue growth of 24% to 28% in constant currency.
So still very strong growth.
Yeah, absolutely. No signs of slowing down anytime soon.
Now, to fuel all this growth, they must be investing heavily.
Oh yeah, they're spending a lot of money.
Their capital expenditure for this fiscal year, they said it's going to be about double what they spent last year, around $16 billion.
Yeah, that's a significant increase, but it's necessary to keep up with the demand they're seeing.
Right. They need to boot out that infrastructure.
Exactly. They need to expand their data centers, invest in new technologies, and so on.
And they said they're being smart about how they're deploying that capital, right?
Yeah, they talked about how they have a certain degree of flexibility in how they approach their data center expansion.
Okay.
They can start with smaller data centers and then scale them up as needed based on actual customer demand.
So they're not just building these massive data centers and hoping that people will come.
No, they're taking a more measured approach, which makes sense.
It does.
And they also emphasize that they have a high level of standardization and automation in their cloud infrastructure.
Okay.
Which helps them to manage these capital expenditures more efficiently.
So they're trying to get the most bang for their buck.
Yeah, exactly.
All right, so let's zoom out for a second and try to summarize what we've learned from this earnings call.
Sure.
What are the key takeaways for someone who's looking at Oracle as a potential investment?
Well, I think the first thing that really jumps out is the strength of their future revenue visibility.
Okay.
That massive backlog and the strong growth in their RPO that clearly demonstrates that they have a significant amount of revenue that's already contracted and waiting to be recognized.
Right. That's a good sign for any business.
It is, and it highlights the strong market demand for their cloud services, particularly OCI and their AI capabilities.
And speaking of their cloud strategy, their aggressive expansion of data center capacity and their partnerships in the multi-cloud space, those are also key takeaways, right?
Absolutely. Those moves show that they're very serious about capturing a larger share of the cloud market.
And they're not just focused on one specific type of cloud either. They're playing in multiple arenas.
Yeah, they're taking a very flexible and adaptable approach to the cloud, which I think is smart.
It is. And their emphasis on AI, on integrating AI into their applications and building out their AI data platform, that's another important takeaway, right?
Definitely. They're clearly betting big on AI, and they're positioning themselves as a leader in that space.
And their financial outlook, their increased growth expectations for the next couple of years, that also speaks volumes.
It does. It shows that they're very confident in their ability to execute on their strategy and to capitalize on major market trends.
So overall, it sounds like things are looking pretty good for Oracle.
Yeah, they're in a strong position right now. They've got a lot of positive momentum.
Now it's time for our This Is Not Financial Advice segment, where we like to have a little fun and brainstorm some outrageous, but maybe just crazy enough to work trade ideas.
All right, hit me with it.
So we've been talking a lot about AI and Oracle's big push into AI.
Yeah.
And obviously there's a lot of hype around AI chips and the companies that are making those chips.
Right.
And there's also a lot of talk about the companies that are providing the specialized cooling systems for these massive AI data centers.
Yeah, those are the obvious plays.
Exactly. But I think there's another angle here that people might be overlooking.
Okay. I'm intrigued. What are you thinking?
So think about it. As these AI models become more and more complex and the data sets they process become bigger and bigger, the need for lightning fast, ultra reliable connections between the servers, the GPUs, and the storage systems within these data centers, that becomes absolutely critical.
Right, because if the networking can't keep up, it's going to create a bottleneck.
Exactly. So my idea is to look for companies that are specializing in cutting edge, high bandwidth, low latency interconnect technologies, specifically designed for these hyperdense AI environments.
Oh, interesting.
Maybe they're pioneering new optical interconnects or advanced switching fabrics, something like that.
Okay.
And a speculative long position in a company like this, it could offer significant upside if their technology becomes a key enabler for the next generation of AI infrastructure.
Ah, so it's a picks and shovels play, but focused on a very specific and crucial component of the AI build out.
Exactly.
I like it's definitely outside the box, but it makes sense.
And it's a high risk, high reward proposition for sure, but that's what makes it fun.
Right. You gotta take some risks if you want to hit those home runs.
Exactly. But as always, please do your own research and don't invest based on anything we say here.
Right. This is purely hypothetical.
All right, and on that note, I think we've reached the end of our deep dive into Oracle's Q3 fiscal year 2025 earnings call.
We covered a lot of ground.
We did. We unpacked the key numbers. We explored the drivers behind their performance, and we even ventured into the realm of speculative trade ideas.
It was a good one.
It was. So what stood out to you the most from this earnings call? What are your final thoughts?
I think for me the biggest takeaway is just how well positioned Oracle is for the future.
Yeah.
They're firing on all cylinders. They're investing heavily in the right areas, and they've got a clear vision for where they want to go.
I agree. I think they're definitely a company to watch. So if you're interested in learning more about Oracle or about any of the other companies we've talked about, please do your own research and feel free to to join the conversation online.
Yeah, let us know what you think.
And be sure to tune in next time for another deep dive into the world of earnings calls.
See you.
Take care.